So this is our currency of the week special, pound dollar special. This is Theresa May, UK Prime Minister, yesterday speaking out about Brexit, global Britain. That was the message. And this is what happened with the pound. Of course, you all know it. Weakened gap under 120 and a huge rally afterwards. Currently, we're seeing some profit taking, of course, but anyway, it was a huge move of nearly 3%. So let's just run through what happened. Last week we had, as usual, the pound suffering from hard Brexit talk, leaving the single market. Then the speech was announced. We learned that she would speak this Tuesday, and the pound went higher on hopes that she would say something positive about staying in the single market, going for a soft Brexit. And then over the weekend, the Sunday Times released the big takes from the speech that May will take the UK out of the single market. Markets open in Asia, pound dollar slipped under 120, and then it shot back up in her speech. Well, the move higher to 121 began before her speech, but basically these are the main things that Theresa May said. First of all, her message was relatively upbeat. She was optimistic about the UK. She was optimistic about how Britain can become global. That was, of course, positive. But two things caught the attention of markets. First of all, that she said that any agreement, any Brexit deal will come to the approval of Parliament, not only the House of Commons, which is, of course, the elected official, but also the House of Lords. And the second thing is that she will steer for an agreement that will be signed relatively quickly, but the implementation will take time, will be in phases, a transitional agreement. And that, of course, makes things more smooth, less uncertainty, and it helps markets. And, of course, the third thing that happened yesterday was that we had a short squeeze. After the big fall, some took profit, and this became a cascading event of stop-loss points, and that's why we had an exaggerated response. Because if you look now at pound dollar, we're about 80 pips or so below the highs. So we also had a counter effect to that counter effect. But anyway, that's a recap of what happened yesterday. I wanted to talk about it because we don't see such moves every day. It's important to understand the mechanics of markets for future similar events. And now let's talk about pound dollar a bit more in general. So we have more clarity for the Brexit path. Okay. Hope that Parliament will soften the deal, hope for gradual implementation, what I was talking about, and hope for external access to the single market. So Theresa May did say, as expected, that the UK will leave the single market, that Brexit is Brexit, a clear cut, but still some kind of external access. So again, this provides some hope. So that's why the pound went up, of course. On the other hand, in addition, moreover, inflation is rising in the UK. We learned that yesterday it came out higher than expected at 1.6. The Bank of England, where we see here a picture of Mark Carney, the governor, they could even raise rates, okay? So maybe we could say the big falls are behind us. Has the pound, have the tables turned on the pound? Is everything hunky-dory from now on? In the meantime, the United States, look at Donald Trump. Before Trump, we had the Fed minutes showing that the Fed believed that Trump will really provide some fiscal stimulus, but Trump's press conference a week ago failed to mention stimulus, so the dollar was downed. So all this sends us to a conclusion that pound dollar will rise, right? Well, some caveats, some limits here. Brexit is still Brexit, still loads of uncertainty, still a major change, still worsening of trade relations between the UK and the EU, no matter how you look at it. The Bank of England, despite rising inflation, cannot really raise rates. They don't want to choke the recovery. Much of the inflation comes from external sources, from the weakness of the pound, okay? Watch out for jobless claims. We'll learn about that today. If they continue rising, it's a sign of worry for the UK economy. And watch out for all the political ramifications of Brexit. For instance, a renewal of the talk about Scottish independence, for example. okay, and other issues in the UK, lots of uncertainty over there. So I think it's a big short squeeze. Maybe we'll have pair gain a bit more, but it's not that everything is perfect in the UK and the pound is set to rise against the dollar and against other peers. It's a big bounce from the lows. Maybe we'll not visit 120 anytime soon, but I don't also see the pair going up that far. Now, to conclude this special about the pound after yesterday's events and looking forward, let's look at the pound dollar charts to look at the bigger levels, okay? Let's zoom out a bit. So here we are. Here we are, the bigger scheme of things. Pre-Brexit, we were trading at the 140s, okay? Touched 150 on the night of the EU referendum on June 23rd, when there was hope for Remain victory. And then the big crash. First, we saw the pair trading in a very wide range here between 127.90 to just under 135. Then came the second crash in early October, exacerbated by the flash crash. We fell under 120 very briefly, stabilized there, 121, almost reached the immediate post-Brexit lows of 127.90, but no cigar, and then another fall. If we zoom in a bit, 124.15 was yesterday's high, also a high seen earlier. Further resistance 125.20 and 127.30, and of course the post-Brexit low of 127.90. Looking down, 123, 122, 121.20, and 1985. Okay, 1985. Nice round number to remember. That was the year that pair really traded at these kind of levels. Okay, so big bounce from the lows. You can see that yesterday's move was really quite bigly, as Trump says. But I'm not sure that. Also, if you look at the technicals, it's hard to say that there is a change of trend right here. Okay. So this concludes our special segment for pound dollar. Okay.